When most people think about inheritance, they think about physical things: a house, land, cash savings, maybe a business. Assets you can see, assets you can touch, assets that feel real. But something is quietly changing. A new category of wealth is emerging, one that doesn't exist in the physical world, one that lives entirely online: digital assets, NFTs, virtual land, online identities, metaverse economies. And the question is no longer whether these things exist. The real question is, can they become part of long-term family wealth? Could the next generation inherit not just property and money, but digital ownership? At first, it sounds unrealistic, maybe even speculative. But if you look closely at how the world is evolving, it starts to make more sense. The shift from physical to digital value, over the past 2 decades, value has been steadily moving online. Music shifted from CDs to streaming, movies moved from theaters to platforms, communication moved from letters to instant messaging. Work itself is becoming increasingly digital, and now ownership is following the same path. In the past, owning something meant holding it physically. Today, ownership can exist entirely in digital form. A domain name, a digital artwork, a virtual item in a game, a piece of land in a virtual world. These things may not feel real in the traditional sense, but they carry value, because value is not determined by physical form. It's determined by demand, and demand is increasingly digital. Understanding NFTs beyond the hype. NFTs are often misunderstood. Most people associate them with expensive digital art, images selling for thousands or even millions of dollars. And while that did happen, it created a distorted perception, because NFTs are not just about art. At their core, NFTs represent ownership, a way to prove that something digital belongs to you. That ownership can apply to many things: art, music, game items, membership access, licenses, intellectual property. In simple terms, NFTs are a way to assign value and ownership to digital assets. And once ownership becomes possible, markets begin to form. The Metaverse economy. Now combine NFTs with the idea of the Metaverse, a digital environment where people interact, work, play, and transact. This is where things become interesting, because the Metaverse isn't just about entertainment. It's about economy. Virtual land can be bought and sold. Digital stores can operate, services can be offered, experiences can be monetized. Just like in the real world, except everything exists digitally. And as more time is spent online, these environments become more valuable, because attention drives value, and attention is increasingly digital. The concept of digital inheritance. Now, let's connect this to family wealth. Traditionally, inheritance includes physical and financial assets. But if value continues shifting online, digital assets may become part of that equation. Imagine passing down a portfolio of valuable NFTs, virtual land in established platforms, revenue-generating digital assets, online businesses, digital intellectual property. These are not theoretical anymore. They already exist. The challenge is not whether they can be inherited. The challenge is understanding how to manage them responsibly. The risk factor. Before going further, it's important to be realistic. Digital assets are still evolving, and they carry significant risk. Markets are volatile. Trends change quickly. Some projects lose relevance, others disappear completely. Unlike traditional assets, many digital assets don't have long track records. That makes evaluation more difficult. And without proper understanding, it's easy to overestimate value. That's why approaching this space requires caution. Not excitement, not hype, but structured thinking. Speculation versus long-term value. One of the biggest mistakes people make with NFTs and metaverse assets is treating them like quick profit opportunities, buying based on trends, selling based on hype, chasing short-term gains. This behavior mirrors trading in volatile markets. and it produces similar results. Inconsistent outcomes, high risk, emotional decisions, but long-term wealth is built differently. It's built on value, sustainability, utility. The question shifts from, what can I flip for profit, to what will still matter in 10 years? That shift is critical because most digital assets will not survive long-term, but some will, and those are the ones that matter. What gives digital assets long-term value? For a digital asset to become part of long-term wealth, it needs more than attention. It needs utility, relevance, demand. For example, does it provide access to something valuable? Is it part of a growing ecosystem? Does it generate income or opportunity? Is there a community supporting it? Without these factors, value becomes fragile. And fragile assets don't belong in long-term strategies. Ownership in a digital world. One of the most powerful aspects of NFTs is true ownership. In traditional digital platforms, you don't really own your assets. Your account can be restricted. Your content can be removed. Your access can be limited. But blockchain-based ownership changes that. It creates verifiable, transferable ownership. This has long-term implications because ownership is the foundation of wealth. And if ownership expands into digital spaces, then wealth naturally follows. Generational wealth is about stability. Here's where things become very important. Not all assets are suitable for generational wealth. To pass something down, it needs stability. It needs resilience. It needs long-term relevance. Many digital assets today are still experimental. That doesn't make them useless, but it does mean they require careful evaluation. Families should not treat them as replacements for traditional assets, but rather as supplements. A small, strategic allocation, part of a broader system. Not the foundation, the role of education. If digital assets are going to become part of inheritance, the next generation needs to understand them. Because unlike physical assets, digital assets require technical knowledge. Wallets, security, access management. Without that knowledge, assets can be lost permanently. So education becomes critical. Not just owning digital assets, but knowing how to manage them. Security and access. One of the biggest challenges with digital inheritance is access. If private keys are lost, assets are gone. If systems are not documented, future generations may not be able to access them. This creates a new type of responsibility. Families must think about secure storage, access planning, clear instructions, because without structure, digital wealth can disappear silently. The bigger picture. Digital assets represent a shift, not just in technology, but in how value is created and stored. The world is becoming more digital, more connected, more virtual. And as that happens, new forms of ownership emerge. Some will fail, some will evolve, and a few may become foundational. Final perspective. So are NFTs and Metaverse assets the future of inheritance? Not entirely, at least not yet, but they may become a part of it. A layer within a larger system, a new category of ownership that grows alongside traditional assets. The key is balance. Understanding the opportunity while respecting the risk, because generational wealth is not built on trends. It's built on stability, on structure, on long-term thinking. And if digital assets are approached with that mindset, they can become more than speculation. They can become part of the future of wealth, not replacing the old system, but expanding it. And that's where the real opportunity lies. And as this shift continues, something deeper begins to change. Not just what we own, but how we think about ownership itself. Because for most of history, ownership was tied to physical limitation. Land could only exist in one place. A house could only be occupied by one family. A store could only serve customers within a certain distance. But digital ownership breaks those limitations. A digital asset can be accessed globally. It can generate value continuously. It can exist across multiple platforms and ecosystems. This creates a new kind of leverage. And leverage is at the core of wealth creation. The rise of digital scarcity. One of the biggest criticisms of digital assets is simple. They're not real. They can be copied. They don't have physical existence. But this misses a key point. Value has never depended on physical form alone. It depends on scarcity and demand. And digital systems are now capable of creating true scarcity. NFTs, for example, are not just images. They are proof of ownership tied to a unique token. Even if the image is copied, the ownership is not. That distinction is what creates value. It's similar to how anyone can print a picture of a famous painting, but only one person owns the original. Digital scarcity works the same way, and as more people begin to understand this, the perception of value begins to shift.